Hello everyone and thank you for joining True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. This disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Hello everyone and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I'm going to cover previous week fundamental analysis. I'm going to discuss core CPI related to USA and the gross domestic product related to UK. And those were the dates, September 11 and September 12th. So what is core CPI? Month over month. MORM stands for month over month. The Consumer Price Index, also known as core CPI, month over month measures the monthly change in the average price of a basket of consumer goods and services, excluding food and energy, which tend to be more volatile. By removing these categories, core CPI provides a clearer picture of underlying inflation trends and helps assess the cost of living and price stability in the US economy. As one of the Federal Reserve's key indicators, core CPI plays a critical role in shaping monetary policy. A stronger than expected reading can prompt the Fed to consider tighter policy through higher interest rates, which usually strengthens the US dollar. Conversely, weaker inflation can support a more dovish stance, pressuring the US dollar lower. Now, on September 11th at 12:30 p.m. UTC time, we got a number at 0.3%. The previous number was also 0.3%, and the forecast was also 0.3%. The core CPI reading came in exactly as expected, showing no change from the prior month. This result indicates that inflationary pressures remain steady, neither accelerating nor cooling. Now, the market impact on euro dollar currency pair that we got is, well, we got the core CPI at 0.3%, which matches the expectations. So the market reaction is usually limited as the outcome is fully priced in. Euro USD actually kind of moved sideways overall. So the overall analysis is the 11 September 2025 core CPI report confirmed market expectations at 0.3%. On the surface, this should have limited intermediate impact on the US dollar since traders had already priced in this outcome. However, the market response revealed that positioning and sentiment played an important role. So the conclusion is, although the core CPI figure match both the forecast and the previous reading, the Euro USD currency pair moved up after the release. This suggests traders viewed the data as insufficient to support stronger Fed tightening, or they anticipated a softer policy stance in months ahead. So the core CPI remains a crucial driver for the US dollar even when the number matches expectations. Market reactions can defy textbook scenarios due to broader context such as Fed communication, risk sentiment, and positioning. For now, the upside move in Euro USD highlights that dollar bulls were not fully convinced by a steady 0.3% reading. Let me show you the chart of euro dollar currency pair as well. At this point in time, euro dollar is moving up, and the report came on 11th right over here. So we got kind of a bullish price action over here. Next one is the gross domestic product, GDP, related to UK. Here it is. The gross domestic product, GDP, month over month measures the change in the total value of goods and services produced within the United Kingdom compared to the previous month as one of the broadest indicators of economic performance. GDP reflects the pace of growth, business activity, and overall economic health. Now, we got a number at 0.0%. The previous number was 0.4%. So overall, we got a 0.0% number, which confirms the stagnation with little economic growth. And market reaction may be limited, and GBPUSD may remain, range bound. Let me show you the chart of GBPUSD currency pair. This is the daily time frame of GBPUSD currency pair. So on 12th September, we got kind of a sideways price action overall, and then price action moved higher after that. The UK economy faces a fragile balance. Resilient services have helped offset weakness in manufacturing and construction, while elevated borrowing costs and inflation risks continue to weigh on activity. The flat GDP figure highlights these cross currents and leaves the Bank of England in a difficult position as it weighs growth concerns against its inflation mandate. For GBP USD, the pair movement also depends on the relative stance. So overall, we got the sideways price action after the news announcement in GBP USD currency pair. Next one is the previous week global market trends, and we're going to discuss the euro dollar and US dollar Swiss franc. So let's take a look at Euro USD. Euro USD is moving up over here overall, and I expect more upside. Regarding the US dollar Swiss franc is falling down. It's going down overall. So the way I see market is going to drop more over here. Expect for the weakness in price action of US dollar Swiss franc currency pair. Next, let me talk about the current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the overnight interest rate in Canada, and we're going to discuss the US dollar versus Canadian dollar currency pair. Next one is the unemployment rate in Australia, and we're going to discuss the AUDUSD currency pair. So let us start with the first news item, overnight interest rate related to Canada. So on September 17th, we're going to get that financial news announcement. Right now, the news data release isn't actually there, but we will get it on September 17th. Today is 16th. So let's discuss it. What is the overnight interest rate in Canada? Well, Canada's overnight interest rate is the Bank of Canada's key policy rate, which influences short-term lending between major financial institutions. It serves as the primary tool for guiding monetary policy, affecting borrowing costs, consumer spending, business investment, and ultimately inflation. A higher rate signals tightening conditions to control inflation, while a lower rate reflects easing designed to support economic growth. Now, on September 17th at 1:45 p.m. UTC time, we're going to get the news release. Let me tell you the previous number. The previous number we got is 2.75%. The forecast is 2.5%. So Forex markets widely expect the Bank of Canada to cut its overnight rate from 2.75% to 2.5%. Such a move would indicate that policymakers are prioritizing growth concerns over inflation risks, aligning with recent global central bank easing trends. Now, the potential market impact on USD CAD is if the overnight interest rate is higher than the forecast, meaning greater than 2.5%. This suggests the Bank of Canada remains cautious about inflation and signals tighter monetary conditions for longer. If the and this also means that USD CAD is probably going to drop. Well, it's already going down. Let me show you the chart of US dollar versus Canadian dollar currency pair. Right over here, USD CAD is falling down, looks bearish. Okay. Now, if the overnight rate matches the forecast 2.5%, this confirms the expectations of a modest policy easing, likely results in limited initial market reaction. So market focus may shift to the accompanying policy statement and forward guidance. If overnight rate is lower than forecast, meaning less than 2.5%, this indicates a more aggressive easing stance by the Bank of Canada. So this may raise concerns about slowing domestic growth. That's bearish for USD CAD. This means that the USD CAD, that's bearish for Canadian dollar, and this means USD CAD may move higher. So the conclusion is the September 17, 2025 overnight interest rate decision will be closely watched for its implications on Canada's monetary policy path and economic outlook. A smaller than expected rate cut or a hold could strengthen the Canadian dollar, while a deeper cut may put pressure on it. Forex traders should also pay attention to the Bank of Canada's policy statement, inflation commentary, and global risk sentiment for further direction on Canadian movements. The next one is the unemployment rate related to Australia. What is the unemployment rate? Well, let's discuss it. Australia's unemployment rate measures the percentage of the labor force that is without work but actively seeking employment. It is one of the most important indicators of labor market strength and overall economic health. A lower unemployment rate typically signals stronger job creation and confidence in the economy, which tends to support the Australian dollar. A higher unemployment rate suggests weakening labor conditions and may weigh on the currency. Now, the previous number we got related to unemployment rate is 4.2%. The forecast is also 4.2%. The actual data not yet released. Forex markets are expecting unemployment to hold steady at 4.2%. If this result materializes, it would suggest stability in Australia's labour market despite global headwinds, providing the Reserve Bank of Australia with room to maintain a balanced policy stance. So the potential market impact on AUDUSD is if unemployment rate is lower than forecast, meaning less than 4.2%, that reflects stronger labour market conditions, and it reduces expectations of Reserve Bank of Australia easing in the near term. And that's bullish for the AUD, which means AUDUSD may push higher. Well, it's already going up. Let me show you the chart of AUDUSD currency pair. Right now you see AUDUSD is going up. Now, if unemployment rate matches the forecast, 4.2%, that confirms steady labor conditions, which is likely results in a muted immediate reaction, and traders may look toward participation rate and employment change for further signals. If unemployment rate is higher than forecast, meaning greater than 4.2%, that signals potential softening in the job market. And that may raise expectations of a more dovish stance from the Reserve Bank of Australia. So that's bearish for the Australian dollar, and this means AUD/USD may face downward pressure. The conclusion is the September 18th, 2025 unemployment rate release will be closely watched for insights into Australia's labour market resilience. A stronger than expected reading could strengthen the AUD by reducing the case of monetary easing, while a weaker result may fuel concerns about slowing growth and pressure the currency. Traders should also pay attention to broader labor market details and global risk sentiment for a complete assessment of AUD next direction. Next, let us take a look at current week's global market trends. So let us take a look at euro dollar and then USD CAD currency pair. First one is the Euro USD currency pair. Euro USD currency pair, the trend looks bullish and I expect more upside. If you go over to a 4-hour time frame, same story. Euro USD is firing up. Next one is the USD CAD. Okay. This is the chart of USD CAD currency pair, and the way I see market is probably going to drop more over here. It could turn sideways as well. So we need a breakdown in price action below the support level. If price action isn't going to break this level, we could get a bullish leg over here. Next one is the Australian dollar versus United States dollar currency pair, AUD USD pair. AUD USD currency pair, the trend looks bullish in weekly time frame. And if you check out the daily, same story. The RSI is not overbought at this point in time, so we might get further upside in AUD USD currency pair. Next one is the spot gold. Spot gold is actually going up. Let me show you the chart of XAUUSD pair. Spot gold is turning higher. It's bullish trend over here. So XAUUSD pair price action just keep going up and up over here. So I expect more upside in XAUUSD pair. Okay, if you have any questions or comments, feel free to type inside the chat box and I'll be happy to answer your questions. So let us review what you have learned today. Well, we discussed about overnight interest rate related to Canada, and we also discussed about unemployment rate related to Australia. Then we also looked at euro dollar, USD CAD, AUD USD, and spot gold pairs. These are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, September 23rd at 2025, 12 p.m. UTC time. So that's it for the time being from my side. Have a nice day and bye-bye.